In the last video, I went over all the parts of the Ichimoku system, and we went over 150 charts illustrating how to decide if you want to go long, short, or stay away. If you missed it, click here to get up to speed. In this video, we'll go over the math of how each line in the system is calculated. The reason for this is because if you understand what the different parts mean, you can manage your risk better, have tighter stop losses, and make more money in the long run. We'll also go over examples that look good on the surface, but should be avoided because they're more likely to be losers. Here we're on the chart for gold. The indicator does look a little messy, but once we break everything down, it'll make more sense. Bringing up the settings, there are four main parts: Tenkan Sen in green, Kijun Sen in blue, Chikou Span in purple, and the green and red clouds. Let's take off everything except the lagging span and then go through them one by one. The lagging span is the simplest of the four. All it is current price plotted 26 periods behind. The purple line is mixed in with the group of candles, indicating price has been in a range the last month. Here, this situation is different. Price is nowhere near the purple, indicating price could be breaking out. I'm sure you're familiar with how EMAs look. They smoothly follow price. The averages for Ichimoku aren't like that at all. Here you can see long periods of a completely flat average, followed by a stair-stepping motion, more stagnation, and then a burst of activity. This is a direct result of how the averages are calculated. You can almost think of these averages like a 50% retracement. They only take into account the highest and the lowest values and plot the midpoint. Look at the example of these two candles. The second candle actually goes up, but we see both the green and the blue averages go down at a sharp angle. And why is that? 9 candles ago, the high was on the red candle on the left, and now the high shifts down 2 candles to the right. We're on a different symbol, and notice the last few days, both moving averages are overlaid on top of each other. This is because the same minimum and maximum are both within the last 9 days. Add the minimum plus the maximum, divide by 2, and you get 65, 62. On checking the Kumo, you'll notice the cloud is actually a shaded region between 2 lines. These 2 lines are the Chikou Span A, Chikou Span B. Any moving average system, when you want to go long, you want to see the faster average on top. In this case, that happens when the 9 period rises above the 26 period. These 2 averages are used to calculate where price may see support or resistance in the future, and that's in the cloud. If there was a very low minimum point more than 26 periods ago, this will drag down span B and will give further confirmation that price has been rising instead of falling. With span A above B, we get more confidence that a long will be successful. Moving on to the purple, the reason we don't want to see purple bumping into price or below it is because this would indicate price is in a range or retracing. Price is less than it was a month ago on a daily chart, probably having a tough time. When looking for entries, we want to see confluence between factors, and this would help us also set our stop loss. So for example here, we're thinking about going short. The faster moving average is below the slower one. Price is below the cloud and the faster moving average. Purple is below the price. The only thing holding us back is the green cloud. Few candles later, price breaks down and the cloud twists to red. Notice the flat areas on the top of the cloud and 26 period average. The longer the flat period, the more resistance it may provide on a retracement. We can set our stop loss just above both in this case. Going back to the picture from the last video, you'll notice a few things. Even if the last candle were above the green, I still wouldn't take this even though all parts of the system line up. For one, price is often drawn to flat lines like a magnet. I'd rather be patient and see how price bounces off here, here, or here than jumping in now. Both are long signals. Both have been chopping back and forth lately, which isn't very appealing. but I'd rather go long on one chart versus the other. Guess which chart looks better to me? We can't see very far in the past, but look at the purple line and how thick the clouds are. On top, it looks like we're almost at resistance. I could see price going up one more candle and then getting pushed down. On the way back down, notice how thin the cloud is for support. Price could easily fall right through there. On the other hand, purple looks like it has a lot more room to fly on the bottom. If price were to retrace, I could see the cloud having more weight to offer support. This is a long that I do like. Look how many safety nets price has to support it. If it falls through the top layer of the cloud, the Kijun Sen is right there to slow it down. Right under it is the Tenkan Sen that can push it back up, and the bottom of the cloud isn't too far below either. This is a short I'm not that excited about. Sure, all the signals are there, but look way back here. This was your entry. If you missed it for whatever reason, it's better to wait. Maybe price will go back up between the moving averages and you can catch it on the way back, or just go find something else to trade. Here's another example of why you have to be a little more discerning and not take every trade that lines up. Price seemed to crash in the last week with 2 gap downs. Don't forget, price often loves to retest the 50%, which would be where the blue moving average is. Also look to the right and see the flat bottom of the cloud in the same area. If price goes up into the cloud and then peaks down, you could reconsider it, but not now. Think about why the cloud twisted red just now. This is the average of the high and the low over the last 52 periods, which would be in this area. We're losing some of the minimums, which would automatically raise the average and push span B over span A. But it wouldn't take much for a slight rise in the moving averages, and then the cloud would flip back to green, and you would have jumped at a false signal. I'm not that crazy about this short either. Look at all the angles. Flat, 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 flat. I'd much rather go short here. Price has been in a tight range. Stop wouldn't have to be too far away. I hope you're starting to see the nuances. It goes beyond these 5 things agree and automatically take the trade. Make sure to subscribe for more Ichimoku videos. Now, let's take a step back and realize even if Ichimoku were a perfect system, which it's not, it's only one piece of the puzzle. In order to be a consistently profitable trader over the long term, you need much more than just a strategy. It requires proper mindset, knowing how to set your stop loss and take profit, and managing your risk. All of these are covered in my essential playlist. Click here to get started, and I'll talk to you soon.